Hi there, good afternoon. You've tuned into ET Now, and this is Market Fatafat right here on ET Now with me, Shell. This is along with me, I have Vinny Motiwala. Very good afternoon to you, Vinny. And a very firm footing is what we are seeing the markets at, despite after coming back from a long weekend. You can see the Nifty that scaled past the 18,100 mark is the IT index. That's among the top sectoral performer in trade today. Add to the list, you also have metal index that's holding on to good strength in today's trading session. Broader markets also participating in the uptick in today's trading session. You have the mid cap as well as small cap holding on to strong gains, outperforming the benchmark indices as we speak. Talking about Nifty Bank, that one is moving in tandem with the benchmark indices, but there are a lot of stocks that we need to watch out for in trade, and that's exactly what we are going to do through the course of the next 1 hour. Take you through all the stocks that are buzzing in trade, isn't it, Vinny?
Absolutely. On that note, let's bring on board our technical analyst for today. We have Kunal Bothra with us, while from the research team, we have Vamakshi as well as Lisa joining in with us. So very good afternoon to all three of you all. I'm going to be starting with the first stock, and that we're going to talk about is MRPL. Now, this stock is mainly in focus because earnings, yes, that did come in during market hours on Friday, but main reason for the fall in MRPL is Singapore GRMs over the weekend saw a sharp fall coming in. They were down as much as 70% in just a day's time. And from $2.7 per barrel, they're trading around that $0.8 per barrel mark even today. Now, Singapore GRMs are at the lowest levels since October 11, 2022. They have been on a declining trend, and from 2023 peak, which is at around $14.3 $3 per barrel on 25th of Jan, it has fallen below the $1 per barrel mark as well. Now, analysts are believing that the fears of weak demand and high inventory levels mainly led to the crash for GRMs, and that is why we're keeping an eye out on MRPL. They do get negatively impacted because it's for GRMs falling in trade.
All right, let's move on. Let's talk about Neogen Software, and that particular counter is in focus because of earnings. It just came out with its earnings a short while ago, and if you look at the numbers on a sequential basis, the revenue is coming at around 305 crore rupees versus 255 crore rupees. A good jump coming in on that particular front, as well as if you look at the profit, it's coming at around 78.6 crore rupees versus 48.2 crore rupees. Neogen, like I said, it reported a higher profit. This was aided by strong growth in revenue from clients based in Europe as well as Middle East. The company saw a sharp uptick. 17% uptick is what Neogen has logged in. This is more since May 2021. Like I mentioned, the revenue from Europe as well as Middle East region surged to about 110 crore rupees, which is a smart uptick on a year-on-year basis from 79.7 crore rupees. The company has also announced a dividend of about 5 rupees per share for the year FY23. So that's Neogen Software, smart up move on back of strong earnings.
Okay, let's move on. And Kunal, the first stock that you've picked out for us today is the heavyweight Reliance. What are the charts indicating for this one? We are seeing a mild bit of an up move coming in the last week, last 1 month as well, actually. How should we be expecting Reliance to move now?
Good afternoon, first of all. So I think Reliance Industries now today breaking past about the 2450 mark or coming very close to that breakout of 2450 levels. Is a very interesting chart because I think about the 2450 mark, the stock could probably be coming back to a 3 to 4 month swing high. This could be a big turnaround for Reliance Industries because earlier the stock was an underperformer. It went to as low as 2200 levels, I think in the month of March. But then the recovery in the month of April was quite strong, steady for Reliance Industries. And if the breakout also sustains about the 2450 mark, we can expect a strong up move coming in the stock over the near term. Now, there are a lot of candlestick patterns which are coming out to be extremely positive for the stock on the monthly time frame, which means that the rally which started off in the month of April for Reliance Industries, I think should have a spillover effect going into the month of May at least, and would expect 2500 to 2550 as near-term targets for Reliance Industries, so would maintain the bullish stance.
All right, that's the take coming in on Reliance Industries, bullish stance on that particular counter. But Vamakshi, Satin Credit Care, this one is a buzz on back of earnings. How are they?
Well, absolutely, Cheryl. When you look at the numbers, quite an impressive set coming in for Satin Credit Care. When you look at the NII, that's one uptick of almost 33% on a year-on-year basis to 172 crores. PPOP, that is the pre-provisioning operating profit, that is also seeing an uptick of nearly 80% year-on-year. Not just that, their asset quality has also improved. GNPA has decreased from 3.92% to 3.2%, while NIMs have drastically improved as far as FY23 is concerned. They stand at nearly 16.54% as compared to 9.5% that we saw in FY22. So good improvement on that front, and resultantly we can see that impact flowing in on the ROE as well as the ROA. ROE has improved from 2.6% to 15%, while ROA has improved from 0.53% to nearly 3.52%. So all parameters, the stock is doing quite well. In fact, the company also reported the highest quarterly disbursements, that is worth nearly 2,546 crores. So all in all, a good set of numbers for Satin Credit Care Network, and that is the reason why the stock is abuzz today, up nearly 12.5%.
Okay, numbers surely were good, and we also spoke to the management, HVC and CMD at Satin Credit, and spoke about the growth guidance going forward as well. Let's go across and listen into what he had to say.
Debt capital front, we are still very highly, we are very lowly geared. In fact, so we have got a lot of room in terms of growth. We are just geared at about 3 times our capital. Having said that, if we look at our capital adequacy is close to about 27%. It is 26.6%. For us to grow 25%, which is we have given our guidance, we don't require any additional capital because of the high capital adequacy which we've got. But if we surpass this growth guidance, and if we require capital, it's not difficult for us to raise capital. We've been raising capital across the years as such. So, having said that, the growth guidance which we've given at about 25% plus, I think we still don't require capital now at the current juncture.
That's the management of Satin Credit Care talking about the guidance and the way forward for the company. The stock is seeing an uptick of about 12%. But Lisa, Lloyd Metals, why is this one in focus? Earnings is the reason?
It's not on earnings, it's on the back of the operational update that the company has reported on. Well, they reported record monthly iron ore dispatches for the month of April, and they dispatched around 1 million ton in April, and the production also came to around 1.2 million tons. And this came on the back of them receiving an environmental clearance which they received in March to increase their iron ore mining production from 10 million tons, from 3 million tons to 10 million tons, and it also clears the pathway of the company's objective of being a complete value chain of steel making. Well, the company has also laid down a detailed capex plan in Q4 FY23 where they aim to change from them being a DRI, that is a direct iron ore integrated player, to an integrated steel producer, and they will also be adding value-added products in the form of wire rods as well as pellets. So, well, on the back of this news flow, the stock is up, and it also touched a 52-week high of around 341, and the stock is has cooled down since then, but at one point it gained 5% on the back of it touching intraday high.
Let's move on and talk about BHEL on the charts. Kunal, how is this one looking like on the charts? Good run-up that we've already seen in the last 1 month, 6 months as well. Is there an indication of a further up move?
Yeah, it's been one of the favorites, from the PSU pack from my side at least, because over the last 4-5 months, specifically, the stock has shown remarkable recovery. I remember, I think the stock used to just trade around the 53-55 mark for quite some time in the second half of 2022. But then the recovery from those 50-odd levels for BHEL is quite interesting. The volumes have started to shape up quite well for the stock. Even the last 1 or 2 months of the price recovery, the stock is showing signs of a bullish engulfing candlestick pattern on the daily, on the monthly charts. So again, very encouraging data points. And this gels on quite well with the overall view on the PSC stocks, that most of the PSU names are heading towards a breakout. They are heading towards a higher dimension breakout in terms of monthly as well as on the quarterly chart. So this could probably be interesting times for many of the PSU names. BHEL is one of the stocks which I am extremely bullish on from long-term play, and my sense is that the stock could probably come back to that three-digit mark, hopefully by the end of 2023.
Alright, so that's the take coming in on BHEL. But Vinny, let's talk about Vedant Fashion. No doubt, Met Gala is underway. We are seeing all of them dressed in amazing couture, but
Vedant Fashion came out with its numbers, not for the Met Gala yet, but hoping someday that would come make a mark for them as well. But let's talk about the numbers then. When you look at the numbers coming in for Q4, it seems like a good set of numbers actually on the first look. Revenues were up by 15.3%. EBITDA seeing a growth of 16% as well, while the profits have also supported the overall performance. The bottom line has seen a growth of 23%. Margins expansion coming in there as well. Slight bit of an expansion there, 49.1% versus 48.6%. So just almost a 50 basis point expansion in terms of the EBITDA margins of the company. Morgan Stanley has come out with a note for Vedant Fashions as well. Now they're maintaining an overweight rating on Vedant Fashions. They've given a target price of 1,354 rupees. They said that the Q4 was in line. Strong customer sales growth is still seen for the company, and strong wedding season in Q4 is with 40 to 50% higher wedding dates is something that is supporting the growth as well. So let's keep an eye out on this one. As of now, the company has given up its morning gains, trading with a decline of 1.8%.
All right, that's Vedant Fashions for you, but let's move on. Let's talk about Sesha Shahi Paper. This one also came out with its earnings over the long weekend. And if you look at the consolidated numbers, revenue from operations saw an uptick of about 21.7%, coming in at around 573 crore rupees, while calculated EBITDA stood at around 157 crore rupees as against 79 crore rupees, which is a very smart uptick. Rather, it's doubled on a year-on-year basis. If you look at the profit, also more than doubled on a year-on-year basis, coming at around 180 crore rupees versus 54 crore rupees, 57 crore rupees. I stand correct on that front. Also, a huge jump in the margins. All of that kind of aided the stock price performance at open. You saw a sharp spike in this counter. No doubt, it's given up some of those gains, still holding on to gains of about 1.8% as we speak.
Okay, let's move on and talk about REC Limited. Kunal, this one is trading at a 52-week high today. What should we be expecting going forward from this one? How much more upside is there?
So REC Limited was one of the recommendations on the BTST segment which I had given on Friday's trading session. My expectation was that the stock would get into a breakout mode because of the way the momentum shaped up for REC on Friday's trading session. But this now seems to be a much stronger up move for the stock. So even after an uptick, I think of 2%, 1.5 to 2% on an initial basis, the stock has gained another 1.5% today so far. So it's risen by more than 3%, 4% so far. But I think more importantly, the stock has managed to break past about some very strong hurdle points. So breaking past about 130, 134, the two important resistances for REC. This, in effect, the stock is also formed a triangular pattern on the daily charts. So a lot of positive confirmations coming out for REC, and I would believe that this momentum is here to sustain. Both REC and PFC, I would expect at least another 10 to 15% upside over the very near term.
All right, so that's the take coming in on REC. Pretty bullish call coming in from Kunal on that particular counter. Amakshi, M&M Financial, this one is in focus today.
Well, a strong set of numbers is the reason why this stock is in focus today. When we look at their net interest income, that's an uptick of nearly 10%, but it is the PPOP that also rose by nearly 5% on a year-on-year basis. The PAT number came in much higher, 14% year-on-year uptick that we're seeing here. So overall, when we look at the numbers, they were a strong beat. Apart from that, when we look at the earnings consistency, we saw that this quarter, M&M finally returned to that consistency. In fact, the fourth quarter was the third healthy quarter consecutively. Apart from that, we're seeing some very strong growth coming on the AUM front. PPOP, however, was subdued due to higher operating expenses. We're also seeing that there has been a sharp improvement in asset quality. GNPL is below the 6% mark. We also have a note that came in from CLSA on M&M Finance, and they highlighted that the focus area for the company's results was the asset quality. In fact, their top management, Anish Shah, could not have emphasized it more. But nevertheless, the only disappointment this time around were the higher OPEX expenses that we saw, but they've maintained that M&M Financials is the top pick in the sector, and given that, they've actually maintained a buy and hiked their target price from 310 to 330. So that was M&M Financials for you, up in trade on the back of strong numbers.
Let's move on and talk about BIOCON. Lisa, why is this one in focus today?
Yes, BIOCON subsidiary BIOCON Biologics, they have received GMP approval from the European Union, and that is for a biosimilar product which is bevacizumab. Well, this is indicated for the treatment of various cancers as well as for specific eye diseases. So it enables the company to continue addressing the needs of the patient in the European Union, and that will be through its high quality products. Just recently, they also received the approval for another biosimilar product, which was a targeted cancer medicine known as Herceptin. Well, on the back of this positive news, the stock is up trading around 2.9%, and it's currently at its intraday high.
BIOCON for you, 3% uptick coming in for that particular counter. But Kunal, do you think that this momentum for BIOCON will sustain? Back-to-back positive news flow coming in for the counter, but are the charts throwing up some other signs?
Yeah, the tide seems to be turning for BIOCON because, till last month when the stock was, I think, on the verge of breaking below the 200 levels, the negative news flow, the selling pressure for the stock was almost very consistent on the downside. And surprisingly, start of this month of April, the stock has seen a very good recovery. It's moved on from the 200, 202 mark to now 240 odd levels for itself, which means a decent recovery of almost 20% from the recent swing lows. For the first time, I think in last so many months, the stock has formed a bullish engulfing pattern on the monthly charts. So again, a very important data point, because this would probably earmark that possibly the trends for BIOCON would change significantly, and from being a sell on rallies, the stock would actually be a good buy on dip. So bullish on the stock and expecting more follow through up move going forward.
Okay, let's move on. It's lunchtime, so we have to bring on some of those names. At least we're not getting to eat those pizza burgers, but surely I'll talk about the stocks, and that is the QSR names. Now, Devyani International, Sapphire Foods, as well as Westlife Development, all these three are in focus today. Goldman Sachs has initiated coverage, come out with a note on that, where they are actually quite overweight on Devyani International as well as on Sapphire Food. Now, they're maintaining initiated with a buy rating for both these stocks. For Devyani, target price is 200 rupees per share, while Sapphire, it's 1,700 rupees per share. Westlife, they have initiated with a neutral rating and a target price of 790 rupees per share. What they say that they believe that the QSR is actually representing one of those most attractive opportunities in the India consumer business, as well as the market has a large headroom for growth with many drivers coming in there as well. And in the recent time, we've seen a 15 to 20% correction of QSR stocks, which creates an attractive value to buy them as well. So that is why the positive on Devyani and Sapphire Food, the buy rating over there, by neutral rating for Westlife Food Worlds.
And you can see the stock price also reacted those set of ratings coming in from Goldman Sachs. But let's talk about the auto sales numbers. And Escorts Kubota came out with his numbers. They sold about 7,565 tractors in the month of April, which is lower by about 9.1% when you look at it on a year-on-year basis. The domestic tractor sales also saw a downtick of about 5.5% on year-on-year basis. They've said that festive postponement and unreasonable rains impacted the sales in the month of April, and going forward, they're expecting demand momentum to improve across geographies. Export tractor sales, if you look at it, that one also was lower on a year-on-year basis, almost 50% lower on a year-on-year basis. So Escorts Kubota actually trending lower in trade today. Right now flat with a negative bias, so watch out for this player.
Okay, let's move on and talk about SAMIL, or Samvardhana Motherson as we know it as now. Kunal, on the charts, how are you looking at this one? Today the stock is up 3%. Last 1 month we're seeing gains of almost 13% from this one. What should we be expecting going forward? Is it the right time to still enter this one, or now is it just the time to wait and watch?
Well, if you remember, I think a couple of weeks back, I picked up the stock on the same show and highlighted that how the stock is nearing towards a breakout. This was a point when the stock was almost at 68, 69 mark, on the spot levels. So it's shown very good recovery over the last 1 week or so. The stock has recovered more than 10%. Now it looks very attractive. It seems like the momentum is shifting now on the significant upside for Samvardhana Motherson, and the stock, which is perched at 75 levels approximately, looks attractive for at least another 10 to 15% upside. So a rally which started off in the last 1.5 odd week, I think could now start to gain a lot more pace. Would look out for 80 to 85 as a potential target range for Samvardhana Motherson.
Alright, that's the take coming in on SAMIL. 12% uptick in the last 1 month for that particular counter. Vamakshi, IDFC First Bank, this one is in news on back of the earnings. How were they?
Well, Cheryl, a strong set of numbers that came in from IDFC First. When you look at the NII, that saw an uptick of nearly 35% on a year-on-year basis. Operating profit has grown by 90% on a year-on-year basis, while provisions have also increased marginally as we compare it on a quarter-on-quarter basis. But it is the net profit for the counter that has surged by almost 134% on a year-on-year basis, and net profit has gone up from 343 odd crores to over 800 crores. Apart from that, not just that, the management commentary is also looking quite strong for this counter. They're expecting to see a steady phase of growth kicking in for IDFC First Bank. FY24, they're expecting a 23 to 24% growth for their bank. They're expecting to see 40 to 45% of deposit growth in FY24, and they believe that the structural changes could actually aid the credit quality going ahead. They're expecting the credit card business to also be profitable by FY25. Apart from that, we also have a note that came in from CLSA. They've maintained a buy, in fact hiked their target price on this counter from 75 to 80 per share. So largely a good set of numbers, good commentary that came in from the management, and that is the reason why the stock is up 4.5% in trade today.
Okay, that's IDFC First Bank on the back of its numbers and news flows. But obviously, Kunal, on the charts, how is IDFC First looking?
So again, looks attractive. The stock has broken past about the levels of 60, 62. Today, the stock has formed a gap for itself. But surprisingly, the indicators are extremely overbought for IDFC First Bank. So I think at this point of time, it makes sense to try and book out partial profits at least at current levels and wait for a dip or a correction to come by. Hopefully, if the stock comes back towards the 60, 61 mark, that could be a point to reinitiate a buy. But I think at current levels of 64 and higher for IDFC First Bank, it's a good zone to start taking out some chips off the table.
All right, let's talk about IDFC First Bank more in detail because we had the managing director and the CEO of the bank who joined us on the show earlier, and he said that he's expecting 40 to 45% deposit growth in FY24 and an overall growth rate of 23 to 24% for the bank going ahead. Listen in.
We believe that about a 23-25% growth rate we should sustain for a long time. Last year also was 24%. And considering that, most banks, I'd say, are posting about 20% growth rate in retail, 24 for us, coming from a lower base, should be reasonably possible. The last 4 years also at a stretch, our CAGR growth and deposits is something like, at least retail is upward of 70%, which I'm now talking of 40%. I'm talking of slowing down. But still it's good, like 40%. Even 25, 26, we feel the bank will be very strong in deposit. I'd say moderate growth actually. No, I'm not, by the way, very different than others. If you see the whole banking system is talking of a reasonable growth, you see like between 17, 20% everybody's posting. We're talking of maybe 23, 24. But I'd say that on the deposit side, of course, we expect it to be continue to be very strong. That is one. Two is that I'd say that all the work over the last 4 or 5 years from my predecessors' time in building the bank and time, all that will come to fruition. We must have lost 2 or 3 years because of some issues here or there on a few things, COVID and bad loans and all that. So, but I think that phase is behind. If you look next 5 years, you should be, let me say, pleasantly surprised. You'll forget the past. Now we are collecting 99.5 to 99.6% consistently. If you collect 99.5, only 0.5% moves to 0 to 30 DPD. If we sustain this, we are determined to sustain this. Our net NPA numbers on retail is 0.55%. Our gross NPA in retail is 1.55%. So we are very clear that we will not want to leave asset quality as an issue. And of course, we have to be very watchful for that, but we will be.
Okay, and Lisa, then Rossari Biotech, this one is in focus on the back of its numbers as well?
Yeah, absolutely right. They have posted their numbers where the top line that grew on sequential basis, but the margin was, however, impacted. So revenue was up 4.4% on quarter-on-quarter basis. EBITDA remained flat, while the gross margin, they declined 50 bips on sequential basis. However, on Y-on-Y basis, that saw an improvement because the contribution that increased from the high margin products and also better cost management. So, the management stated that the HPP segment, which contributes around 65%, that saw a decline of around 2% on quarter-on-quarter basis. But the other segment, that is the textile segment as well as the animal health care segment, that grew 10% and 48% respectively. So, as we can see that the numbers were quite good. It was mixed actually, but then the con call details are awaited. More details will be after the market hours. So, we can see the stock is up more than 2% in today's trade session.
Okay, let's move on and talk about RVNL. This one surely has had a great weekend because we've seen a couple of order wins coming in for RVNL. Let me talk about the first one that had come in. They had emerged as the lowest bidder for when you look at it in terms of CMRL for Chennai Metro Rail. And this is a couple of packages that were there over there. Package 3, which is of around for the construction of 5 underground stations, which is for around 1,329 crore. Another order which was around 1,151 crores, which was for construction of 4 underground stations as well. And the other one was for an underground station at Adyar Depot, which is in Indira Nagar, which was for around 666 crores. Other than that, they've also been received a letter of award from Madhya Pradesh Purva Keshtra Vidyut Vitran Company Limited, which is for a supply of installation, testing and commissioning of 11 kV line associated works, which is for around 132 crores as well. So keep an eye out on RVNL. Surely a couple of order wins coming in there. As of now is locked in upper circuit, 10%.
Right, that is RVNL for you. That is locked in upper circuit. But let's move on. Let's talk about NMDC. They've gone ahead and cut iron ore fine prices by 100 rupees per ton to about 4,010 rupees per ton. And also they've cut the lump prices by about 300 rupees per ton. Analysts have said that the price cut was within the expected range. Remember, the price cut is partially impacted by falling international prices, which in turn impacts the pellet prices as well as exports. So that is NMDC for you. That is in focus on that particular news. 1.4% uptick coming in for that particular counter. But that's not the only reason why NMDC is in focus in today's trading session. Also, you have agencies that reported that the company is in talks with Australia-based Hancock prospecting for lithium exploration and mining. Remember, lithium is used in batteries, which is used to power electric vehicles. Apart from that, the company is expecting clearance from Forest Department to start their diamond mine in Madhya Pradesh. So on back of that also, you have NMDC that is in focus, holding on to strong gains of about 1.4% near the day's highest point as we speak, Winnie.
Okay, on that note, we're going to slip into a very short break, viewers. Don't go anywhere. We'll be continuing with more stocks after this break.